Hi, everybody. Hey, this is Brett Mills with Academy Mortgage Corporation. Common question that I'm getting a lot of right now is simply how are interest rates affecting housing prices? Some people ask, are housing prices going to continue to go down? Others are looking at it saying, should I wait to buy a home until interest rates come back down so that I can get more affordability? Very fair questions and can often be a little bit confusing. So my goal here is after a couple minute discussion that we'll be able to clarify what the correlation between interest rates and house values. And so today I'm going to use Weber County, Utah as a basic example of a place that we can look. The principles I'm about to share are uniform and go throughout the different counties in any market that you're looking in. If you have a question about your specific market, don't hesitate to reach out. I'll gladly run that analysis for you, but I'll use that today, Weber County, to teach the principle. So some basic economic principles. I'm going to start with what's called the real estate report card for Weber County, Utah. And there's a few factors that we look at here. Median house price is sitting at about 426,000, showing the forecast and appreciation over the next 5 years at 22%. Currently population sitting about 267,000. Of that, 57,000 are renters, and about a little over 14,000 can afford to purchase from that renter pool. This is an important number as we look at additional household formations coming in. These are people that don't own a home. It could be, perhaps people getting married or graduating from college. They don't own a home and are be entering that market looking for inventory to be able to live in. We have a 73% home ownership rate in Weber County. And so simply taking 73% of the 4,000 gives us additional demand of about 2,942 additional home buyers coming into the market over the next 12 months. Currently, we have 2,007 homes under construction or being built to help meet that demand. Well, you can see the needed is the dark boxes here. So that's showing that we're actually about 14 months short on the available inventory or the needed inventory to meet this demand. And so that bodes well as we have steady demand that exceeding supply. It's a really good factor for housing prices being stable and continuing to grow. We have a really strong unemployment rate in Weber County at 2.19% versus the national average at 3.7%. This factor here is an important number that I like to focus on. It's called the affordability index. And our affordability index in Weber County is currently at 129. What that looks at is it takes into consideration interest rates, incomes, it looks at jobs, cost of living, all those different factors and melts that all together in this index. 100 is the national average. And so our index at 129 means that we are 29% more affordable than the rest of the country. That becomes very important once again as people are trying to find affordable housing, good jobs, that Utah and specifically Weber County in this case will be a great spot for families to move. That creates additional demand. Part of that draw is from this right here, our median household income. We're sitting at 76,561 versus a national average of 55,000. So that's significant. This is the number that will help be a common variable as interest rates and home prices move. So I'm going to use that number. It's an important number. So if I break down this 76,561 and divide by 12 months, that gets about $6,400 a month that a typical family has to pay their bills with on a month-to-month basis. For an affordable housing debt ratio, you take 31% of that $6,400 a month they have in income, and that puts it roughly at $2,000 a month is what that equates to for a typical affordable payment in Weber County. So if I take that $2,000 a month, once again, that's kind of the constant that doesn't change a lot as interest rates and home prices are moving. So if I take that $2,000 a month and enter that in as a available payment, let's see how this is affected. A little over a year ago, interest rates were floating in the 2.75% range on a 30-year mortgage, would allow someone to get a loan for about $490,000. Really important number. If they were putting money down, different things like that. A lot of people are doing no money down options, but if they were putting money down, maybe $525 or $550. But I'm just going to focus on the loan amount of roughly $490,000 at a 2.75% interest rate. Well, let's say that I move that to 6.75 as an example. And that lowers that down to $308,000. So $180,000 swing in availability, because once again, the income didn't really change. And so you're still dealing with this $2,000 a month. That's significant when you see how that affected the home values. Well, if you were to look 6 months ago in Weber County and look for homes, say 325 to $350,000 down more in this affordable range, they just didn't exist. Did a quick search a few minutes ago for homes under 350,000 in Weber County. There's 198 currently available. That's significant. That's an incredible opportunity. And so those home prices have opened up at that price point. Some of them have come down, and that is the correlation. As interest rates have gone up, it's forced that affordability to sell the home into check there. So what does that mean exactly? Well, there's this basic concept I would call interest rate arbitrage. If you were to wait to buy a home until interest rates come back down, what will happen to the home prices again? They will come up. That's an important factor. There is a correlation there. As the interest rates came up, we saw the home prices on average drop by $180,000 here in Weber County. So where's the opportunity? Right now, you can actually get a very affordable home. If you were to buy a house for $350,000, just as the example I was going over, to get $180,000 in equity would take you approximately 15 years of paying down on that. If you wait until the interest rates once again go back down, then all of a sudden those prices will have come up. You'll miss that opportunity. That's the arbitrage that exists right now, to be able to buy, even though the interest rate is higher than what it was. As interest rates over time come back down, that is going to push that value up and create instant equity for you. That's really important if you're looking at it as a homeowner and worried about being priced out. Well, that was the challenge of so many homeowners who were frustrated over the past couple of years, as they were simply priced out of the market because the values were up so high. That opportunity has opened up. And so I encourage you to take a look. We have tons of no money down options. We also have lots of options if you are transferring equity or have gift funds coming in. There's a lot of ways you can buy a home. Investors looking to buy additional rental properties, there's a big opportunity here for you to be able to buy. Once again, the interest rate is a little bit higher. That's affected the price. As those interest rates come back down, that is going to push up, get you instant equity in those properties over the next few years. And then at that point, you can look at refinancing to pull additional cash out as that equity is created, to even buy additional properties. Or if you're a first-time home buyer looking to upgrade into those homes that will be at that point less affordable, you'll be able to transfer that equity to make them affordable. And so you can see that as interest rates go up and down, those are all factors. A lot of people have asked, well, where are interest rates going to cap out? That's an interesting question. Nobody knows. But in general, one number that I've been looking at is our inflation index. And we've now gone 2 to 3 months now with it being consistent and steady and starting to decline, which has been a good ceiling. We've been able to kind of find, okay, what the Federal Reserve has done to try and slow down inflation is working. And so that's excellent and exciting news. We're kind of at the peak of what that statistically is showing. Anything can change in a market, but those are good indicators. And so we started to see interest rates to decline back off of the highs that they were at a couple months ago. And that trend will continue over time. How fast? Don't know. The economy still has to correct, but wanted to highlight that basic principle that as interest rates do come back down, the effect, because incomes aren't changing a lot, is that will push that property value up, and that creates your big opportunity. Hope this has been helpful for you. If you've got questions about specific markets or your options that exist for you specifically, don't hesitate to reach out. We would love to visit with you. You can reach us at 801-614-5125. And I hope that this video was informational. Please share it with anybody that you know that's been having those questions and wondering those correlations. Appreciate you guys and look forward to talking.